just trying to thanks everyone again for joining. We welcome you to August edition of ICAN Amuwo. My apologies to the July edition of ICAN Amuwo monthly webinar. This month's webinar is themed Accounting Beyond Figures, the place of internal audit, internal control, and taxation. And as we have been known for, we have two distinguished resource person in the person of Mr. Bamgboye Adeniyi, who will be delivering the topic on internal control versus internal audits, and will be followed by Mr. Richard Okunola, who will be delivering the topic on current development in taxation, managing desk review, and tax audits. We have our presenters on ground. Please, if you are not speaking, kindly mute your mic. And I don't want a situation where we would be disrupting the session. We have the control to mute everyone actually, but we all believe we are professionals. So let's try and mute ourselves, and we don't want to be that high-handed on ourselves. So let's all, set ourselves up for an interesting and good upskilling session. We've got lots to learn from our two resource persons, and as ICAN Amuwo is not, we tend to more or less like, upskill ourselves with what we have lined up for you. Without wasting much time, I know we've wasted some times kickstarting. We intend keeping this within 2 hours and hopefully end the session within the next 2 hours by 12 noon, so that we can have other things. All of us can go about our other daily activities. Without wasting much of our time, let's kickstart. We are starting up with the national anthem. Thank you all. That we have the national anthem out of the way. We will have the ICAN anthem. Thank you all. Now that we have the anthems, we'll commence the program with our opening prayer. And normally, as a standard, I guess I have to mute everyone. Let me just try and do the housekeeping, so at least. Okay, I think now that we have the co-hosts, which are the presenters, will be able to unmute themselves when their session is called up. So the next item on our program is the opening prayer. And as a standard, we use the second stanza of our old national anthem as our opening prayer. So let's all recite together. O God of creation, direct our noble cause, guide our leaders right, help our youth the truth to know, in love and honesty to grow and living just and true, great lofty heights attain to build a nation where peace and justice shall reign. Amen. Thank you all for giving me the audience. I will be the one moderating the session for today. I thank the district for giving me this opportunity. I don't take it for granted, as well as the chairman, Mr. Olamide Balogun, FCA. So we now have the chairman give us his opening address. Over to you, district chairman.
Thank you so much, wonderful moderator, Mr. Michael Alatish FCA. Can we all see me, and can we all hear me?
Yes, we can see you and hear you, chairman.
Thank you so much, sir. So once again, I'd like to thank everyone for being here, and it's going to be a very brief one. I'd already thanked you before, but still thank you now. So I'll say good morning, professional colleagues, dear sirs and ma'ams. My name is Olamide Balogun FCA, and I'm the 11th chairman of ICAN Amuwo District Society. And the monthly webinar had already been introduced by our moderator, Mr. Michael Alatish FCA. It's going to be focusing on accounting beyond figures, the place of internal audits, internal control, and taxation. And this is ably brought to you by our technical committee of our district, ICAN Amuwo, ably led by Alhaji Isiaka Balogun, ACA, who is our technical secretary and the technical committee head. Our facilitators are gearing up to impact us massively with their wealth and depth of knowledge on the topics chosen. And Mr. Bamgboye Adeniyi FCA, he will be speaking on the topic internal control versus internal audits, while Mr. Richard Okunola ACA will be speaking on the topic current development in taxation, managing desk review and tax audits. And it's set to be an amazing, say about an hour plus thereabout, because like we said, we'll ensure we'll wrap up about 12 noon. So let's pay rapt attention, and as we also take notes for our records. Once again, to all participants here, I say a big thank you. I can see people all over Nigeria, from Kaduna to Abeokuta to Maiduguri, and even from the UK and the US. People are actually staying off to join us. So I'm really, really glad, and I'm happy that we're all here. Have an impactful session, and I hereby declare today's webinar open. Thank you so much. Over to you, our dear moderator, Mr. Michael Alatish, FCA. Thank you, everyone.
Thank you, District Chairman, Mr. Olamide Balogun, FCA. Thanks for that wonderful opening session. So while Mr. Adeniyi Bamgboye, FCA, is setting up his presentation, I will briefly run through his profile, which automatically introduce him, to our clients, to our audience. Mr. Adeniyi Bamgboye, MBA, FCTI, FCA, FCCA, is an award-winning chartered accountant and master degree holder in financial management. Is a fellow of our institute, as well as that of chartered accountant, chartered certified accountant, equally a fellow of Chartered Institute of Taxation of Nigeria, and he has over 10 years professional hands-on experience in banking, audit, finance, accounting. He's been privileged to train and work in places such as the Shonin Bank, now EcoBank, Simba Group, Nigeria, Ernst & Young, where he works as an auditor, serving several clients across different sectors of the economy, telecommunication, oil and gas sector. He has attended several training, in auditing, leadership, corporate governance, and management in Nigeria and abroad, and equally authored several articles and opinions published on several newspapers and online platform. He's a board member of the corporate reporting faculty of ICAN and also a member in the indirectors faculty of the Challenge of Taxation of Nigeria. He recently became FCCA Nigeria's first ever online digital. He will be delivering on the topic internal control versus internal audit. Mr. Adeniyi Bamgboye, FCA, over to you, sir. You have 30 minutes for your session.
Thank you very much. Thank you very much. And apologies, I won't be able to. Good afternoon, good morning, all professional colleagues. I appreciate this opportunity. I'm not taking it for granted. It's a privilege because I know I'm talking to professional colleagues. So it's a privilege, and I wouldn't be able to present my slide myself. The district will do that for me because I'm actually far away in my village. As you can see, I'm in the car. And I'm a bit under the weather, but the show must go on anyway. So thank you for having me. And like I said earlier, we are all professional colleagues, and this course, this topic, internal audit versus internal control, is like, to me, it's like revision to me, because I know we all know what internal audit and what internal control means. But just like the moderator said, the purpose of this exercise is to brush up our knowledge, so we don't rely always on our residual knowledge. On our residual knowledge. So we'll start with the table of contents, which has to do with the introduction into importance of internal control and the types of internal control, types of internal audit process, principle of an effective internal control system, and differences between internal audit and internal control, and consulting opportunities in internal control and internal audit in Nigeria, because I believe money must be made. As professionals, we must try and leverage every opportunity to maximize the benefit of our certificate. So let's move because of time. So next slide, please. As we all know, accounting is not all about debit and credit, financial reporting, corporate reporting. It involves the accuracy and integrity of financial information. So thereby we can't wish away internal audit or internal control, just like that. I was reading a document few years ago. I think I read it few months. I revised it few months back, and I laughed because during the ancient Egyptian era, auditors are known, the business merchants were very strict with auditors. Let me give an instance of what I read. They said, according to what I read, if there are discrepancy, let me use a store for instance. If you work for a merchant and you are being called upon to check the stock in the goods, for instance, and after checking it, you document it. If another person comes and noticed any discrepancy in what you've counted, that person will be killed. I can share the name of the textbook with you. It's an interesting textbook on fraud and internal audit. It now came to mind that this internal audit back in the days was very hard and brutish. how can you kill someone for? There are so many factors that might be responsible for that. You know, fatigue, stress, and all. But what I'm trying to say is that internal audit didn't just start today. It started a long time ago, and I would say it's as old as accounting itself. Only that maybe as due to modernization, we find a way of calling it, attaching nomenclature to it. So we can't say accounting and internal audit is as old as accounting. So as we all know, yes, as someone just made, yes, you would have the presentation slide. Yes. So internal audit, as we all know, is an independent, objective assurance and consulting activity designed to add value and improve the organization's operations. So like I always say, internal audit is an activity, while internal control is a process. I will delve more into that as we move on. Because of time, let's move to the next slide. Next slide, please. Next slide. So, let's start with internal control. Internal control refers to the processes and mechanisms put in place within an organization to ensure the integrity, operational information, safeguard of assets, promoting compliance with laws and orders. Effective internal control system are crucial to mitigating risk and achieving organizational objectives. So what, at the back of my mind, the most important thing is that the underlining summary of all this is that the purpose of an internal control exercise is to ensure that things are working in agreement with plans. That is the summary of it. Because by the time we break them down, safeguard of assets, organizations, regards compliance with laws and orders, all these things are to ensure that there are no disruptions in the day-to-day running of the business, so to speak. So internal audit has a lot of advantages, which is risk management, financial accuracy and reliability, operational efficiency, which deals with the process of reducing waste and enhancing operational efficiency, as the case may be. All these things are to ensure that the profit maximization of any business is achieved. That is the bottom line. And we can also liken that to that of internal audit. We can liken that to that of internal audit. But although there are similarities in certain areas, but there are several differences, which we will look at shortly. We also talk about compliance with regulations, which has to do with, we have a lot of, we have tax regulation, we have a lot of regulation in Nigeria, starting from our constitution, starting from our tax laws, pension laws, health and safety laws. So all these things, depending on the size of an organization, these laws must be complied with. So those are one of the things internal control does. Safeguard of assets. Internal control can be used to safeguard organization assets against theft, unauthorized intrusion and theft, loss of misuse. So ensure that you are, in order to ensure the company is actually getting value for money. It's also used for fraud prevention and detection. Robust internal controls reduce the risk of fraud by ensuring appropriate checks and balance, such as segregation of duties and regular audit. This is to ensure that there is what to avert or avoid or mitigate the risk of what is called one-man risk, whereby one person will initiate the transaction from the cradle to grave. So all these things make activities susceptible to fraud and irregularity. So those are the things internal control brings into play. So next slide. Next slide, please. So when we talk, from here we will talk about internal control. So we have the preventive controls. These are controls designed to prevent errors and irregularities and they are proactive measures embedded in processes to mitigate risk. You know, they always say a stitch in time saves nine. So a part of the examples of these are access controls, where you have you implementing user authentication. We implement user authentication mechanism in order to ensure that you restrict access to sensitive document by to certain level of people within the organization, so that it's not an all-comers affair. We also talked about segregation of duties, which is also part of preventive controls. Dividing responsibilities among different individuals reduces the risk of fraud and error. It also involves separating the roles, from those who authorize to those who process them. An example of preventive control is also training and awareness. Training on compliance, ethical behavior, security policies, and likelihood of misconduct. Because what you don't know, if you train, and training is also a very form of investment. Because if you train your staff, there is a low probability of that staff misbehaving, because that staff knows what is expected of him or her at every point in time. So training and awareness programs are part of preventive controls. Authorization requirements too are also part of preventive controls, whereby and this is irrespective of the size of the organization, even in smaller organizations, you notice that before you incur any expense, you need approval, so that you don't turn the organization into a banana republic, so to speak. So its authorization requirement is also very good, and this provides oversight for in every business. So depending on the size of an organization, the bigger the organization, the bigger the layer of authorization. So we also have physical security measures, whereby you use locks, security badges, and to prevent unauthorized access to facilities and assets. So all these are part of preventive controls, which are types of internal controls. So like I said earlier, this is just a revision course, and we are all aware of all, but it's just to open our eyes more, to ensure to know, to cast our mind back to the days of ICAN exam. So from there we move to detective controls, which are designed to detect irregularities after they occur. I see this type of control as medicine after death, but it is also good, because by the time you nip it in the bud, there is a probability of it not occurring again in future. So it's not totally bad after all. So part of that is internal audit, which involves, both internal and external, which involve regular audit of financial statement processes, financial reporting processes, compliance with policies to identify weaknesses and discrepancies within the system. That's why we as auditors, after our reports, we come up with what we call a weakness letter, management weakness letter. We call it MLP, where you state the weaknesses you've noticed, the recommendation, the risk rating, and the implication too. So you must elicit response too from the management in order to know whether all those controls, all those weaknesses that were noticed have been implemented by the management in order to forestall future occurrences. So that is part of detective controls. We also have a reconciliation. We have our bank reconciliation, even though that is really fading out because of technology now, because all transactions are now approved online real time. Gone are the days of checks. I don't think, except only few organizations issue checks right now. So we also have monitoring system too, which involves using automated monitoring tools to track IT activities. Those in the IT world, they know all these things. So the essence of this is to identify unusual patterns that may indicate fraud or misuse of companies' assets. We also have a exception report, which involves generating reports that highlight deviation from expected performance or policy or compliance or investigation. If we bring this down home to maybe our management accounting or cost accounting days, that's when we talk about variance analysis, when we discuss discrepancies and deviation, which has to do, from there you explain, you investigate why this is not so. Part of detective control is also surveillance system, using a CCTV in order to, using CCTV camera in physical location to detect unauthorized access or theft, so to speak. So from there we go to corrective controls. Corrective controls. Corrective controls, as the word implies, has to do with those controls that are implemented after problems have been identified to correct or mitigate its effect. What am I saying? The problem it has happened, but this has to do with the implementation. The controls are implemented after a problem has been identified. So part of the example of this, because of time, are incident response plan, error correction procedure, disciplinary actions too, because such as queries, suspension. These are part of corrective control, because they say if there is no sin, if there is no law, there won't be sin. Okay, I don't let me just oppose this. So disciplinary action is also a part of ways to ensure corrective control, because I know that if I do something, there will be implications for it. So we also have system updates and patches, which has to do with applying updates to software after vulnerable attack, in order to correct the flaws. We also have root cause analysis, which involves conducting investigation after the incidents have occurred in order to identify causes and implement corrective actions. We also have directive controls. Directive controls, which is directional. Directive controls are treated towards human beings, employees. These are controls that guide human behaviors and actions towards achieving the organizational objective. So we have policies and procedures. In organization, we have what we call the procedural manual. We also have SOPs, standard operating manual. These are laid down policies that guide the activities of individuals, even management, before taking any decision. So these are directive controls. The essence of it is that, for instance, an SOP. The essence of an SOP is to guide maybe both old and new staff on the way they behave. For financial reporting, an accounting standard, an accounting manual might be serve as a guide to provide guidance maybe to new staff or old staff. And we also know that it must be reviewed regularly, in tandem with new standards and latest development. So policies and procedures are great examples of directive controls. We also have job descriptions. When one is given an employment, you are given a job description. And on the job description, it states what you are expected to do. So those are directive controls. Directive, because that gives direction to what the boundaries are, what his goals and responsibilities are. And we also have performance management systems. These are implemented management systems that sets performance expectations, and it provides feedback to the employees in order to check whether they are meeting their objective, or whether their activities are aligning with the organizational goals. We also have formal communication channels, such as whistleblowing hotlines, for reporting formal issues and concerns. We also have training programs too. It's also a form of directive controls. you know. We also have compensating controls. Compensating controls are additional controls implemented to compensate for weaknesses and gaps in other controls. They provide alternative methods to achieve objectives. I always tell my friends who are auditors, I say there are some things while on the job that you do that you not find anything. Let me share a real life scenario. There was when I was in Intertech, I was the head of internal audit, and during a period, we noticed a lot of torrent of invoices, you know, funny suppliers invoices, and I thought, how do we track this? So, fortunately and unfortunately, one of staff has been playing pranks, you know, turning out fake and fictitious invoices, you know, just to bring out get money from the company. The guy, because the company has a standard policy of generating three quotes for any transaction beyond 500,000. Then, so the guy will come up with fictitious invoices, and one day, while reviewing those procurement that procurement document for a part, I think the company wanted to procure AC then. So I made sure I called three of those vendors, and none existed. One even said he was a mechanic. How can you put a mechanic invoice, mechanic number on an invoice meant to procure AC? So that's when we knew that the guy was up to something, and we did further investigation, and we touched all his activities, and we were able to get him, and he refunded a lot of money because he's been doing it even before I joined the firm. So these are compensating controls. These are the things you won't see in books, but you just have to, you just have to create alternatives in addition to the laid down procedure in order to ensure that you detect one or two weaknesses and irregularities. So there are alternative measures implemented when the primary controls are not visible or effective, such as increased oversight. If you notice a strategy is not working, you are adopting one strategy to check a particular process, you can switch to another strategy, which is also, so one of the example of controlling compensating control is to increase oversight, be more alert to what you are doing, manual review, additional training. When you know you fall short in certain areas, what you can do is to increase it, is to go for additional training in order for you to be adequately prepared to tackle the challenges of auditing or reviewing such process. So we also have periodic review. We also have the use of technology, that will save a lot of time. So we have physical controls too, in addition to compensating controls, And physical controls has to do with access controls, like I said earlier, surveillance system, inventory management, where we have stock counts, document security, ensure that all your documents are saved, both physical and cloud-based. Visitors log in order to track movement within the entity. These has to do with physical things within the organization. We have IT controls as well, which deals with user access management, which involves implementing role-based access control to ensure that only employees have access to the system, and the system is shielded from external forces and attack. We also have firewall intrusion and detection system, which is also an example of IT control. We also have data encryption, where you encrypt sensitive data, both at rest and in transit, in order to protect it against unauthorized access. We also have regular system of updates. We also have backup procedures. These are examples, part of internal controls. We also have financial controls, which involves segregation of duties, budgetary controls, which involves monitoring actual expenditure against budgeted amount to ensure financial resources are effectively and various are investigated. You know, we have an approval process too, which involves requiring the management approval for significant expenditure, especially when it's below a certain level of threshold. We have reconciliation procedure. We also have financial reporting controls, which involves the implementing controls around the preparation of financial statements to ensure compliance with accounting standards and accurate reporting. You know, to sustain the integrity of the financial report. So we also have compliance control as well, which has to do with regular compliance audit, procedure and policy documentation, training programs, monitoring and reporting, whistleblowing hotline, contractual compliance review, which evaluates contracts with vendors and partners to ensure that they include compliance clauses that all parties are there. I always tell people, anytime you want to sign any contract, especially if you work in a big organization, don't look at your department alone. Take other people from other departments along. So they will see things from, imagine going with, you know, going for a contract bid, or a contract bid, for instance, or you are trying to defend a contract, or you are even actually trying to sign a contract. You need to get other people. You look at the financial view. Don't look at the amount of revenue only. You have the tax guys too that will tell you the tax implications. We have the safety guys, the safety implications. We have the financial reporting guys, and we have other people too, that other professionals that their contributions are needed in order for the contract to be profitable at the end of the day. So we also have third-party risk management. We also have internal control frameworks, which are examples of compliance control. Because if you follow all this framework, you know, the internal control system will be robust, and you know, and the level of compliance is very high. We also have environmental controls, which the examples are environmental management system, EMS, for those who are familiar with ISO. We also have sustainability audit. Sustainability is what is reigning right now. We also have regular compliance checks, environmental impact assessment. We also have energy efficiency program, waste management controls. You know, we also have more monitoring environmental performance and stakeholder engagement. You know, engaging stakeholders, community members is also in order to live peacefully within the area you are operating. It's also a form of internal controls. And so let's go to the next slide. I think we've been able to touch 10. So types of internal controls. We have operational controls. That has to do with the evaluation of the effectiveness and the efficiency of operational procedures. We have compliance audit, which has to do with ensures adherence to laws, regulations, and procedure. We have financial audit, which verifies the accuracy and integrity of financial records and statements. We have IT audit, that has to do with the access to the controls and security. We have performance audit. We have forensic audit. Next slide. So from there, we move to the internal audit process. You know, the internal audit process we talk about is a systematic approach and a disciplined approach to evaluate and improve the effectiveness of risk management, control, governance process within an organization. But if we look at it from a context of being internal, you know, it is also possible to also engage as a consultant, as professional, to render internal audit services as consultant. So as consultant, I would like to add a stage to this stage, because to me, this is like a textbook a textbook step, so to speak. These are textbook steps because I would like to add pre-planning to this step, because the pre-planning deals with the engagement economics, where you deal with the, although we can also link it with the planning too, but I call them pre-planning because you have to agree. You have to agree in principle with the client before you talk about planning. You agree the fee, you talk about the engagement economics, the planning and everything, before coming to the proper planning itself, the field work, the reporting, and the follow-up. The planning has to do with the establishing objectives in order to define the audit aim and objective, understanding the business, risk assessment. You can see all these things does not involve money, because if you are, this only applies to people who work as internal auditors, or internal audit professionals, or internal control officers in different organizations. But the preparing has to do with the consultants as internal auditors to working within an organization. You can also do preparing, because if it involves you, although it may also fall part of the planning, because if it involves traveling, you spend money. So all those things, you have to do it before doing the actual plan. So you also need to do your risk assessment, which involves the identification and the assessment of risk relevant to the audit scope. You also have to define your scope and approach. Next slide. After defining your scope and approach, you prepare your audit program. From there, you move to your field work, which involves data collection. And you can also use, it's either you use primary or secondary data, as the case may be. But the most important thing is for you to gather relevant information. It could be through interview, observation, and review of documentation. We also have control testing, which involves the evaluation and design the operational efficiency within the organization. Part of that is part of what we call system or process documentation, where you sit with the process owner and discuss, have a discussion on how the process works, So it's in that situation, then you have a better understanding. You can sit with the cash disbursement officer, so to speak. You can sit with the inventory manager, depending on the area you want to audit. Those are part of system or process documentation. We have the substantive testing, which is where the detailed work is. We have the document finding, record of the observation and evidence, and you conclude. From there, we move to the reporting, draft reporting. You send it to the, you send your report, you review with the management. Like I said earlier, this is just a typical, because in your report, you must document your findings, your observation, and you must attach evidence, substantive evidence, real evidence, in order for you to draw your conclusion. You review with the management, you finalize your report, because it's not a witch hunting activity. So, as me, when I was working as a core internal auditor, I will discuss your exception with you as a professional. So by the time the report is coming out, or management is asking you questions, you know what is expected. And after I come to you, I will tell you to sign, just to show that, okay, we've actually come to your system, and these are the things we noticed. So it's not as if there's nothing hidden about it, except I noticed a fraud. Except there is an issue of fraud, then I can keep some things confidential in my report. But if it has to do with normal audit, all the weaknesses noticed during the audit process will be documented, and it will be shown to you. So I will show you. So there's nothing hidden about, so that by the time management is doing up your appraisal, because it might also affect the process owner's appraisal. You know what you expect at the end of the day. So from there, you finalize your report, and you distribute the report to the relevant authority or the stakeholders, including the senior management and committee. Next slide. Next slide, please. So from there, you move to the follow-up, which is your action plan. You monitor progress, because the follow-up is very important. It's one thing as an auditor to, or as an internal control officer to come up with a report. The next thing is for you to follow up, so that you know that is closed. Because so that even in your report, you must put a column where if the issue has been cleared or not. Because that will allow you keep track of what is being detected and how you've been able to take remedial actions in correcting them and in order to avoid them to avoid future occurrence. They said I have less than 5 minutes to go. So please, next slide. So principle of effective internal control system, we have the control environment, which has to do with setting the tone at the top of the organization. You know, this type of environment, the control environment speaks about how effective an internal control system will be. If the management is seen as loose, the internal control within that organization or setting will be loose. So, you know, so you must ensure that the control environment is very strict and things are well documented in order to ensure orderliness, so to speak. Next slide. I'm racing against time. We have the risk assessment, which involves identifying, analyzing, and analyzing risk to achieve the organization's objective and forming a basis of how risk should be managed. In most organizations, they have what's called a risk register, you know, where they document all their risk and update it on a regular basis, you know, depending on the size of the organization. Some organizations split their risk management department from the internal audit. You know, some match them. So that's why you see head internal audit and risk management. Depends on the management style and the type of the size of the organization. Next slide. So we have control activity. Next slide, please. We have control activities, which has to do with the work itself, where the core work is. You know, it involves selecting and developing control that are geared towards mitigating the risk to an acceptable level. You know, we also have selecting the general control activity over technology. This is where the core work is. So all these the activities and the procedures too must be documented and laid down in a professional manner. Next slide, please. We have part of the internal control environment, information and technology. You know, like I said, as I said earlier, effective communication support the internal control system by enabling employees to carry their responsibility. So that's why we always say everything you do, in audit, if it's not documented, it's not done. So you have to communicate. As an auditor, you must be a very good communicator so that they won't see you as a bloodhound or a whistleblower or an enemy. So you must learn to communicate and know how to work with your team members that are not auditors. I always tell my colleagues, most of the friends I have today that gives me referrals are people that I've worked with when I was an internal auditor. Not that I wasn't doing my job, but I know where to draw the line. And when I left, they now saw the reason why I behaved the way I behaved, to do the job and to ensure things are done, you know, the right manner. So next slide. So differences between internal control and internal audit, there are so many differences. Like I said, internal audit is an activity, while internal control is a process. I guess we can read this up, but in terms of their difference, in terms of purpose, the primary purpose of internal audit is to provide independent and objective assurance to the management, while internal control are procedures. They are laid down procedures within the organization to ensure the assets are safeguarded. You know, internal, we have, in organization, you might have several controls. You know, we have cash disbursement policy, we have cash receivable receipt policy, we have fixed asset acquisition policy, procurement policy. All these are procurement are policies, laid down policies to ensure that all those controls are working. Next slide, please. Another difference is in the area of independence too. You know, next slide. In terms of scope too, there are areas in terms of scope. Next slide. In terms of reporting, there are differences in terms of reporting. Next slide. So consulting opportunities in Nigeria, like I said earlier, as professionals, whether we want to do it full time or, you know, as a side hustle, there are career opportunities involved in internal audit and internal control. So we can work as risk assessment, we can do risk assessment and evaluation. We can do internal audit outsourcing, you know, whereby some other organizations they can't afford to employ the expertise of, you know, a qualified accountant or a certified auditor as internal. So we can come in there, you know, for a reasonable amount and do their, you know, charge them for our time, come once in a while, maybe once in a month to do the review. So these are opportunities for us as a chartered accountant. So we also have compliance consulting too. Next slide. Can work as compliance consultant. You know, these are areas that, next slide. We also have fraud prevention and detection. We also have control test training and development. We can, like what I'm doing now, you can do that for companies, train them. Training is also an opportunity in the area of internal control and internal audit. We have technology and data analysis. For those who are technical, you know, who are tech savvy, is also an area to look at. You just need to go for training, you know, equip yourself in the relevant areas you want to specialize in. Next slide. Next slide. I think I'm done. Okay, we have governance and advisory boards. You know, in Nigeria, only we have people who can act as, in addition to doing secretarial job, you can also do, you know, governance and board advisory as chartered accountant. These are all areas we can also delve into as consultants, as advisory professionals. You know, you can provide guidance on governance, best practices, board effectiveness, oversight responsibility, in order to help strengthen the governance structure of the organization. So I think I'm done for the day, and I'm open to entertaining your questions as the moderator permits. Thank you very much.
Yeah, thank you, Mr. Bamgboye, for that excellent presentation. I'm sure our members gained a lot and will show their appreciations through the various emoji icons. For those of us that have gained valuably from our presenter, kindly show your appreciation, you know, using the emoji clap hands. Unfortunately, you can't speak now, but the opportunity for you to speak will come in later. For those of us with questions, kindly note them, or in case you don't want to forget, you can put them in the chat room. We'll be going straight to the second presenter now. Questions will be taken after the second presentation. is sorted. Mr. Bamgboye, kindly, permit us, you can just hang around. Once the second presenter is done, as per our timetable, that's when we entertain questions for both sessions. And if we are not able to accommodate all the questions, depending on the quantity, we will collate those we can attend to online and definitely share with you so that you can make that available for us. Thank you once again, for sharing your knowledge and expertise with our members and all those on this webinar. I'm sure we've all upskilled ourselves in terms of internal control and internal audit and, what is bringing about the major difference. We now have Mr. Richard Okunola, who will be delivering the second paper, which is the current development in taxation, managing desk review and tax audits. Pending is the coming on board. I have a short profile that I'm going to definitely read. So while Mr. Richard, prepares for his own presentation, I'm going to run through his profile. He's a seasoned professional with extensive diverse experience in accounting, tax, finance, global compliance, and reporting. He's an associate of a Great Institute, as well as Institute of Taxation of Nigeria. He's a graduate of the Accounting Technician Scheme of West Africa, and equally Chartered Institute of Management Accountant of United Kingdom. Associate also of American Institute of Certified Public Accountants and a CFA Investment Foundation certificate holder. He's known for his outstanding work with performance, including Standard Talent Awards from KPMG and recognition from various professional bodies, including the District Societies of Institute of Chartered Accountants of Nigeria, the Young Professional and Emerging Leaders, the Iconic Brand Awards, to mention a few. He was also a member of the Tax Technical Desk with Ernst & Young in Nigeria. In addition to his professional pursuits, he's equally a co-founder of Mentoring Corner International, a community that focuses on empowering young accountants in their professional life, academic, finance, technology adaptation, soft skill acquisitions, and personal development. The community has grown over time from 300 members to 300 members in more than 10 countries. So I now present Mr. Richard to us to deliver the paper, Current Development in Taxation, Managing Desk Review and Tax Audits. Over to you, Mr. Richard Okunola.
All right, thank you very much, ICAN Amuwo and District Society, for having me. It's a great privilege to be here. Please confirm you can see my screen at the moment.
Yeah, we can see it. Go ahead, please.
All right, thank you very much. So quickly, so we have 45 minutes, and I'm trying to target it of 40 minutes for myself so that we can finish on time. So I'll just quickly go straight to the point now. All right, so today we'll be looking at the current development in taxation and specifically focusing on managing desk review and tax audit in Nigeria. So I'm sure many of us, just like Mr. Bamgboye have already mentioned, that many of us are familiar with all these topics actually. So it's just to bring some more of like a refresher course and also to like point our attention to some of the things that we might have been omitting or like we don't really pay attention to previously. So yeah, the agenda for today will be covering introduction to tax audits. We'll be looking at triggers for tax audits, objective of the tax audits, regulatory frameworks, overview of the tax audit process in Nigeria, the typical risk areas involved in tax audits, penalties for non-compliance, managing your business to prevent exposure to tax audits, and finally, current development in Nigerian taxation. So quickly, yeah, my profile has been read. So I will just quickly goes to, I would have said we should look for people's expectation, but then I know that we have time for question and answer after this session, so I'll just make this quite straightforward. So yeah, introduction to tax audit. First of all, there is usually this conception that people have about tax audit, and the conception is that tax audit is to witch hunt companies, right? And I'm just here to correct that notion, just like a previous speaker has mentioned that some of these things are just to put processes in place, right? So the definition of tax audit as shown here says that is it, then so I'm going to start with the definition of audit, then we now derive tax audit from it, which you can see already. So it says an audit is a systematic examination and evaluation of financial records, operations, processes within an organization to ensure accuracy, compliance with applicable laws and regulation, and then adherence to internal policies. So of course, just like the audit is specifically designed to review a company's operations, right? So we now have what the tax audit. So the tax audit, on the other hand, is also an examination of the company's accounts or records, right? But this time to ensure that tax filings are accurate and they comply with the tax law. So while the audit itself, which is statutory audit that we are used to, is to ensure that the books are properly done in line with the financial reporting standard and guidelines and then law and regulation of the country, right? Tax audit is to ensure that your tax filings are accurate and comply with tax laws. So they are not necessarily for witch hunting or as a payback for defaulting on your tax work. So now let's move on. Now, desk review. So desk review, now when for those that have done ICAN or those that have done other professional courses, you will see that when they are talking about desk review, they always talk about it under the topic of tax audit, right? Yeah, because tax audit is a subset of, desk review is like a subset of tax audit. And that's why I've defined it here as that is a type of tax audit, right? Performed remotely, right? Typically conducted from the tax office, from tax authority's office. So they don't need to come to your office for desk review. It is done remotely from the tax authority's office, whether the FIRS or the LIRS. It is just like a review, right? To evaluate whether the returns you have filed or submitted is correct, and then to checkmate whether you have been doing the right thing sometimes. So for people that work with LIRS, and of course, maybe in-house tax consultants or in-house tax accountants or tax managers, you would have seen some letters. I remember when I was working with a company in 2021, the LIRS sent a letter that, oh, we observed that your company has been paying 11 million naira on a monthly basis for payee, but last month you paid 9 million naira. Why there was a discrepancy? I don't know if anybody has seen something like that before. So yeah, that's a sample of desk review. So we have to tell them, oh, one of the key employees resigned, and of course, this payee has declined. So you understand that? So the desk review is to carry out that kind of review on your company. Now, let me be fast so that I'm able to cover everything. Okay, so yeah, triggers of tax audit. There are so many triggers that can cause your company to be tax audited, and some of them have been highlighted here. So when we have significant discrepancy in your income or profit reported, of course, when there is significant, for example, you reported 24 million last year, and this year you are reporting 5 million, of course, that can trigger a tax audit. So we have unusually high deductions or outrageous business expenses. Yeah, so let's say your rent last year was 10 million, this year is 50 million, and your profit, your revenue did not significantly increase proportionately. So of course, that can trigger a tax audit also. We also have consistent reporting of net loss. So we have some companies that are, of course, they are making loss, but when it is consistent for 5-10 years, then there's a problem. So we need to know what is going on. Is it that you're under declaring or over bloating your expenses? So there might be a need for tax audit because of that. So we also have complex business structures. Of course, when the business structure this one is always peculiar to some industry, let's say like telecommunication sector, right? So this one is, of course, it's always done for everybody in that industry. You just see later, maybe for manufacturing companies, you just see that all the manufacturing companies got the same letter, same template, just the name is changing. So that happens to where they are doing complex business structure and they're trying to review what's happening in the industry. So we also have unreported income, high volume of refunds. Of course, when you have people that do refunds and rebates, you see that you have tax audit frequently too. So we have industry-specific risks. So high level, like I mentioned, for complex business. So when you're high level of tax evasion in a particular industry, let's say like some manufacturing industries, let's say like steel manufacturing and the likes, right, where they have to deal with a lot of, let's say, non-registered vendors sometimes. So because of the nature of the business, so there might be a need for audit of everybody in that industry at times. So we have history of tax default. So when they know that this company is always defaulting, they don't pay tax, then there's a probability of you being audited also. Then large charitable donations. So you went online, you do giveaway. You went to do giveaway of 10 million naira. When you are reporting that your company is making 30 million naira as operating profit. So where are you seeing the money from? That can also trigger tax audits. Then we have ambiguity of course, related party transactions. And we have failure to report foreign bank accounts. Many other things like that. So I've just summarized some of the key ones here based on what came to head at the point I was preparing this presentation. So yeah, what are the objectives of tax audits? Don't worry, we'll still get to the practical aspect. So what are the objectives of tax audit? Objective of tax audits. So number one is to verify accuracy of tax returns, right? So verify accuracy of tax returns. We want to see whether what you have reported is correct, whether you have reflected the true position of your accounting activities, right? Then also number two is to detect and prevent tax evasion. So of course, they will identify any instances of tax evasion or fraud, ensuring that all taxable income is reported, right? So it's not possible that you say that your VAT, let me give you a live example. Your VAT in January is 20,000 naira. So if you do a work back of that VAT, let's assume that your revenue is supposed to be around, let's say, 140,000. I'm just giving an instance. But you now reported a revenue of 10,000 naira. So a revenue of 100,000 naira. They'll be like, okay, when we apply 7.5% on this amount, it is below the VAT that you remitted. So how come you remitted more VAT than the amount you earn? So that can trigger, of course, tax audit, and that's part of the objective of why they are reviewing it. So we have to ensure compliance with tax laws. Of course, your company is expected to be audited, ideally on an annual basis, right? However, in some instances where there is no issues, you can see 3 years, 2 years, in fact, 5 years sometimes. And then, so another objective is also to assess tax liability. We want to see whether, for example, the FIRS, the LRS, the state authorities, they all have a target to meet in terms of tax revenue. So when they've already done their own forecast and say, okay, company A is supposed to give us 50 million, company B is supposed to give us 100 million, company C is supposed to give us 300 million. At the end of Q1, that's quarter one, they are expecting to see that at least 1/4 of that revenue should have come from company A. If they don't see it, they can easily issue out the audit letter and say, okay, we need to audit and know what is going on. So stuff like that to assess tax liability. Then also to evaluate internal controls, just like Mr. Bamgboye have said. So they also use it to kind of evaluate whether your financial management practice, right, whether it is strong, whether it is weak. Is it that you don't charge VAT for some companies? Is it that you charge VAT and you don't remit? So they also use to do that evaluation of internal control. And finally, to promote fairness and equity. So if company A is paying so well and company B in the same industry, having the same revenue, is underpaying, then we need to check what is going on. So it's just to promote fairness and equity, that everybody is actually doing the right thing. Yeah, so those are the objectives of tax audit. So there might be other non-obvious objectives. Some people think that is to have it get back at you or something like that. So that might be your personal opinion too, but for this one, I'll just limit it to these objectives. Yeah, so the regulatory framework. The regulatory framework guiding tax audit in Nigeria includes, and are not limited to this, so we have the section 26, 27, and 34, 35 of FIRS Establishment Act. We have the section 58, 60, and 68, 66 of the Company Income Tax Act. We have 46, 47, 48 of the Personal Income Tax Act. And we have the section 31, 32, 33, 36 of the Petroleum Profit Tax Act. So if there are other tax laws or regulations that guides a particular tax that you are to remit, then you need to also check very well. There might be other section that guides the tax audit also. So yeah, quickly, overview of the tax audit process. So I want us to finish up this part on time so that we can have time for question and answer soon. So overview of the tax audit process. So the first step in a tax audit, and I'm going to be using tax audit and desk review interchangeably. So because the major difference, like I mentioned, is that the tax audit, the desk review is done remotely from the FIRS office, and it's just more of a review of what you have submitted or your returns, while the tax audit is a more detailed examination of your accounting information for a particular year or for period of accounting years. So the first stage of tax audit is to get a notification, right? So you get a notification from the tax authority, whether the FIRS, the LRS, or State Internal Revenue Service. I'm sure that many of us should be familiar with what the tax authorities are. So you get a letter from them requesting for you to either inviting you for a tax audit or requesting for certain documents regarding a review. Now, the first thing you do at this point is to look at the letter very well. Of course, check whether, number one, it is addressed to your company properly. It's possible that there's a company, for example, let's say there is, let me use popular company like MTN, or let's say we say Dangote. Yeah, Dangote has plenty groups. Maybe the letter was issued to Dangote Cement, but was sent to Dangote Sugar. You understand? So you need to also check. Now, that is even still better because they are still within the same group. So there's possibility that a company is bearing Etisalat Limited, and another one is bearing Etisalat and Co. Limited. Another one is bearing Etisalat Steel Manufacturing Limited. It's possible that they address the letter to the wrong person, sometimes due to, of course, the bureaucracy nature of the tax authority sometimes. So there is always a kind of file being transferred from here and there. So there might be a arrangement. So after you have checked that, I don't want to spend much time on that. After you have checked to be sure that these details relate to your company, the second thing you should do, take note, the second thing you should do, I didn't put it too much. I don't want the slides to be too much. That's why I just summarize as a placement. So the second thing you should do after you have confirmed is to ensure that that period that is being referred to by the tax authority has not been audited before. So a lot of people make that mistake. 2022 has been audited already. They've already given you LOI, letter, and then you've already sorted the tax liability. They've given you a letter of discharge. And another tax authority now sent a letter that they want to audit that same period. It is your responsibility to point it out to them that, oh, sorry, this period has been audited before, and as a result, you cannot audit it again. Right? So those are the kind of things you do under the notification stage. You quickly identify them. Number two, also at this point, so you can also agree to the FIRC that if they say submit your document later by 14 days time, and then you look at it, can I meet up with this 14 days? Maybe you are even doing your statutory audit or you are doing another audit. You need to check all those things and say, oh, I'm not sure I can meet up within 14 days. So what you should do at that point is to make sure that immediately you draft a letter requesting for extension or more time. Right? So, and trust me, the FIRS are also human beings, and the LRS are also human beings, and the other persons that you're interacting with, they are all human. So they would understand, except it is a strategy that you have been adopting to kind of run away from being audited. That one is not acceptable. But if it's a genuine attempt to extend the time for the audit, of course, you can go ahead with that. So now, after you have done that, you've done a response to the letter. The second thing is, of course, you acknowledge the letter that either they should start coming on the day they proposed or they should extend it for you. Second thing is now to document gathering. So you inform. Now for desk review, you will likely pass through stage 1 and stage 2 only. And after that, maybe a reconciliation meeting, and then that's all. So for stage 2 now, document gathering, this involves you to gather all the relevant documents for that audit. This includes, but not limited to, your audited financial statement, your corporate tax computation, your trial balance, your general ledgers, your payee documents, your VAT withholding tax, and the likes. The list of documents that they requested for is always on the audit letter that they will pass on to you. So it might also include a list of contractors, list of suppliers and customers and the likes. So after doing all those, then we move to the stage of what we call the pre-audit exercise. So the pre-audit exercise is the stage before the audit. So number one, some people prefer, depending on the tax authority you are interacting with, some prefer that you send them the documents ahead so that when they come for the field audit, they'll just come and be doing the verification of those information. Others prefer that you make them available so that by the time they come, they'll just start work and review it. Either ways that you agree on, all those things should be discussed during the pre-audit stage of your audit. That's the pre-audit exercise. So this stage also involves preliminary meeting. We call it preliminary meeting, where you meet with the authorities that want to critically review your books. So you guys discuss on modality of the audit. Do you want it to be virtual? Do you want it to be physical? You look at the time frame. How long are you guys going to be staying on the field for the audit? So I've seen a audit that's lasted for just 1 day. A field audit, yes, because we've already sent all the documents ahead to the tax authorities. They've reviewed everything. What they just came to do was to look at the invoices, which we've also made available before they come. So it's already in the box file. So, and after the fair day, they were like, oh, there's really no need to come back again because we've already seen almost everything. Any other information we need, we'll send a letter to you guys and then you will pass it on to us. So you can agree those modalities with the FRS. And of course, it's up to them to now accept or not. Then also, you can also ask for other information that you think you might not be able to get. You can inform them ahead. So then you agree the particular date you want them to come for the field audit, right? So now the field audit exercise itself, this is the point at where the FRS or the LRS or the State Internal Revenue Services come to your office to review the books of accounts, right? They come to your office to review the books of accounts. And they also check transactional documents, right? They look at what are the transactions you have that have happened over the years. A lot of things have been looked into, right? So, and some of us that are familiar with audit, you know that it can be a rigorous process when they are asking for some information. So, but what I would just advise at this stage is that make sure a team member in the finance team who has stayed long enough in the finance department or who has a good understanding of the finance is available to support the tax auditors or tax consultants. So, and I always encourage that you try to get a tax consultant because some companies, because of the fund that they will pay to tax consultant, they said they will do it by themselves. At the end of the day, you have exposures that you could have actually managed effectively if you had a tax consultant. So I will encourage that you get a tax consultant if you don't have one. So at this point, also remember to make the tax authorities feel comfortable. So I put a point down here. If you look at this point, I said if you are not doing anything illegal, you have nothing to worry about. So if the tax authority visits you, it's your responsibility to take care of them in terms of providing lunch, providing water. You don't have to, except if they decline it. It's just a courtesy for you to provide those things to them. Now, also the final stage, after this stage has been concluded, the authorities return back to their office to prepare the report of the audit, right? After this report has been reviewed by the tax controller or maybe head of audit, then it is being forwarded to you for action, whether to request for additional documents or to tell you that this is actually the outcome of our findings, and as a result, you're supposed to pay additional liability of so. Now, when you get that, of course, I've hardly seen any taxpayer that says that liability and says, oh, let's go and pay immediately. No. So there might be a need for reconciliation meeting. Sometimes there might be misunderstanding in the business sector. So in that case, the authorities expect that you provide those clarifications to them, whether in writing or by coming for a reconciliation meeting. Now, at the end of the reconciliation meeting, which can be 1, 2, 3, 4, 5, depending on how serious the case is, right? Sorry, can everybody hear me? I think I'm hearing one background. Can anybody hear me? Can everybody hear me?
Somebody we can hear you.
All right, thank you very much. Okay, yeah, so at this final stage, we have the reconciliation and closure. So when the reconciliation has been concluded, if both parties still do not agree, there is a chances that FRS will issue a letter that says that they've refused to agree, right? That's NORA, notice of refusal to agree. LRS also issued something very similar. Now, at this point, you can take the case to Tax Appeal Tribunal. You can take it to High Court, you can take it to Court of Appeal, and you can take it to Supreme Court, depending on the level of disagreement. And at the final stage, of course, the liability is either established or cancelled. Yeah, so that's like everything about the tax audit process. Now, there are still some things that you should watch out for, which are typical risk areas in tax audit. So these are the areas that you need to focus on, especially for companies and for consultants, areas that FRS are always looking out for, or LRS are always looking out for when they are doing their tax audit. Sorry, I did not really touch about LRS because a lot of states have different approach. So I'm looking more of the federal tax authorities. And then the LRS tools also have similar model. So yeah, we have the revenue reconciliation where you see that FRS will do 4 positions. They will do comparison of your revenue as per AFS to TB. If they see any variance, they say explain. Comparison of your revenue as per AFS to GL. If they see any variance, explain. They can even do TB to GL again. If there's variance, explain. They'll do VAT returns. They'll do a walk back of your VAT. Revenue as per VAT returns to AFS, explain the difference. They can even go as far as doing receivables to revenue. People that are accountants, consultants, or company tax managers here, they will understand what I'm saying. If you have seen this before, it's a very annoying process. So you need to defend everything. Now, the best way to go about this is that you should have done this exercise before the audit so that you can close out any gap. Closing out any gap does not mean you should falsify information. It simply means that, for example, your AFS to TB, there is a chance, there's a high probability of it not tying, especially if you are using different accounting software and there were accounting adjustments that were made by your auditors. So you need to now look for a way to put a line that shows that audit adjustments add it back so that everything can tie properly. The next one is audit journals. Yes, so make sure that your audit journals are readily available for review. Post-balance sheet events, make sure they are available, and then adjustment by auditors, make sure they are available. These are risk areas. So especially if they are a long-term event, so you need to make them available. Now, provisions, accruals, exchange rates, whether realized or unrealized. So if you look at people that have issues with this part, mostly manufacturing companies, because of the level of, I was discussing with a company recently, and the country finance manager told me that, okay, Richard, we've been making loss, exchange loss, unrealized exchange loss on a monthly basis. What can we do? Even if we just sell one small thing like this, we make exchange loss. What can we do? So all those things are part of the things that you need to document that, okay, the nature of my business, I import. So when I import, by the time I'm selling local currency, I'm always making net loss, and I'm because of the exchange difference. And then I have competitors too that are affecting my business. So all those things, try to document them. If possible, pass a policy document in-house in the company, signed by the CEO, signed by the MD, signed by the finance manager or directors, or maybe the board resolution on it, so that you can have it as a policy document to also support your argument when you are defending yourself. So you also have confirmation of unutilized capital allowances. So of course, this one too, you need to make sure that you have enough capital allowance, and if you don't have enough, make sure that you have justified that the one that you have has been utilized. Then also getting your CAFA. So some of us know what CAFA is, certificate of acceptance of fixed assets. So this is to certify that your capital allowances are genuine. That is, your asset that you claim to own by your company is actually for your company. So we also have input VAT documentation. We have validity. We have manufacturing sector. We have input VAT documentation for validity. So we have some of the information includes and this is more peculiar to the manufacturing sector. Sorry. So we have issues like where you have huge input VAT that you cannot claim for the period, or you have output VAT, right? Or you have input VAT that you cannot claim for the period, or output VAT that is lower than expectation. So of course, these are things that can trigger issues. So, or you have input VAT that are from transactions that are outside your cost of sales. Let me give you an instance. You know that there was a case between Chi Limited versus FRS at some point in 2022 February, where the FRS mentioned that gas utilization. So this company was using gas to produce their items, and then of course somehow if you look at it, that gas utilization looks like operating expense, but then the company was able to claim that this gas utilization falls under the category of direct cost, right? And as a result, the input VAT on that consumption should be should be allowable as input VAT. So, and then the court now decided and look at that, okay, let us look at the definition of input VAT. So it says that if the item forms part of your stock in trade, that is direct cost of producing or selling the particular product, then in that case, it's allowable as an input VAT. So because of that, they were able to justify and then claim input VAT. So you might need to just add that documentation to support all the claims so that you don't charge input VAT on your audit fee. Audit fee, input VAT on audit fee in Nigeria is not an allowable expense. Input VAT on some services that are rendered to you by suppliers, they are not exactly allowable expenses. So you might need to look at all those things very well before you come up for your audit exercise. Then also look at intercompany or management services agreement. So look at it, whether you have said, so I've seen a situation where the company said, our intercompany agreement is that for every service you render to us, we'll give you 10% as our service reimbursable fee, something like that. So, and then they now review the GL and they discover that sometimes you do 20%, sometimes you do 30%, and the agreement shows that you only do 10%. So you need to carefully review all these documents also before the audit to be sure that you are not exposing your company to any risk. I've mentioned TAFA. So we have whether the tax is due to FRS or SIRS. So this one too is also very important. We've seen accountants that made mistake of paying withholding tax on rent. They paid it to FRS instead of LRS. So when LRS is doing audit, LRS will say, no, we never received it, so you have to pay it again. Likewise, if it's for FRS, to the same thing happen. So you need to carefully look at all these things, right? There are risk areas, then so you can know how to manage them. Then we also have inventory valuation. So we have FIFO, we have weighted average, and we have system rate. So system rate is what causes you most, right? Because FRS is trying to establish what the value of your inventory is to see whether they can tax some portion that has been, of course, written back or something like that. And because for people that use SAP, you know that SAP does automatic calculation sometimes. So there is possibility that the inventory you claim to have is lower than what you have on the system. So all those things are risk areas. And then to manage them is more of just explaining from a technical perspective how these things should have been. Penalties for non-compliance. So yeah, some of the penalties include legal actions, of course, everybody taking themselves to court for asset seizure, forfeiture of assets, enforcement action. So we have monetary fines, of course. You have to pay the liability. That if the liability is established, you have to pay it. We have interest on unpaid taxes, right? This can be as high as 24% or something like that. So depending on the MPR rate, CDC, the Central Bank of Nigeria monetary policy rate, right? So the interest and penalties accrue on the liability that has not been paid. Then we have penalty for late filing. So that one is the normal LRP that you need to file. We have reputational damage. Yeah, so some companies, well, I think it's only when it's extreme that FRS should do this and other LRS should do this. So you see some companies that FRS will post non-compliant letter in front of their gate. So it's a kind of stain on the company in terms of reputation of the company. So reputational damage can be avoided. Of course, these are part of the penalties. And we also have operational disruptions. So if a factory is closed down by the FRS, then of course operations will be disrupted, and a lot of budgeted supplies will be affected also. So it's better to just be compliant than not being compliant. So, and then we have additional audit and scrutiny. So of course, the more the exposures, if a tax audit, FRS does a tax audit on you now, and then LRS discovered another tax audit, and then like that, everybody keeps saying that you are non-compliant. There's a possibility that they'll just issue a letter that kind of either CAC also intervenes or other agencies come and conduct an audit on you also. So we move, so like I mentioned there might be other penalties based on the severity of the offense. Then we have managing your business to prevent tax exposure to tax audit. So some of the steps to manage your business to prevent exposure to tax audit includes accurate record keeping, right? So maintaining, of course, I've written it here. I've kind of summarized it in case anybody needs to get a slide. So we have accurate record keeping, which involves documentation of every activities. Like the first speaker mentioned, when it is not done, it never existed. When it's not documented, it never existed. It's a kind of basic principle for accounting. If I say that I sold something to you and I don't have any documents to support it, then it's as good as I never sold anything to you, right? So we have timely and accurate tax filing. So this one is also very important. Timely and accurate tax filing is very important. We have proper classification of employees and contractors. Of course, this part is particularly important for people dealing with LRS. So where your payroll shows that you have 100 employees, but in the real sense, you only have 22 employees or 20 employees, then there's a problem, right? There's a problem in that case. Then we also have instances of family consistent revenue recognition. Some people recognize revenue 1 year, another year they come and recognize the reimbursable on revenue. Another year they come and recognize that the revenue is now a commission. So you must consistently have a model to which you recognize your revenue. We also have compliance with transfer pricing rules. So this is also very important. So make sure that your transaction has been conducted as arm's length policy, right? So that your transaction with related parties are not over-bloated and they are also showing the true and clear position of things. And we also have substantiating deduction and credit. So when you say you have claimed withholding tax credit, well, I think tax formats has made it quite easy now. You can easily see the transaction trail on tax promax. So maybe that might have saved your time, but for people that are still having issues, especially when some of your withholding tax credits have not been uploaded yet, then you need to show substantial evidence to claim your withholding taxes. Then we also have regular internal audits. I don't want to emphasize on this again, but it's actually very important so that you'll be checking internally to see whether they are compliant. For example, I usually encourage my clients to do something that they call tax health check. Yeah. So what that means is that January to July, if I pick my revenue and I slam VAT on it, let's assume that I'm into manufacturing, I slam VAT on it, I have my output VAT. I also check my purchases January to June, I put VAT on it, and then now take output minus input VAT. It gives me a particular amount. This amount, if I add up all the VAT I've paid from January to June together, is this the amount I'm having? If I'm short of it, then that means I need to pay additional tax. You might need to include that additional into your July returns that you're going to file, or maybe August return you're going to file, depending on how the case is. So those are planning strategies that you can put in place so that you can have you can be up to date on your taxes, and then you can also avoid any form of exposure. So also, it's important to seek professional tax advice. Let me see, I'm more running behind time. I think I have a few minutes left. So professional tax advice, always try to get a tax consultant, especially if you're not certain about the transaction treatment. You can ask. Do you know that the funny thing is that even as consultants, we also ask our superiors. I had a tax scenario recently. I had to call a finance director, a director in FIRS. Sir, I have a problem with this particular client. This is what they are going through. This. I know that I've managed similar situations, but I want the best approach to manage it. Not because of your colleagues are with me, because I have his colleagues, FIRS guys with me that day. Not because they are with me, but because I want to understand your own experience. He has about 15 years experience. I want to know what I think you have seen on the field concerning this similar business structure. And when he explained it to me, I was like, fantastic. I explained to the FIRS guys, so they were also satisfied with it, and everybody was fine at the end of the day. So you need to ask questions. You need to get professional advice from people that are more knowledgeable than you. And then finally, staff training. This is also very important. I want to imagine that some companies would enroll their employees for this kind of training that we're having now, which is going to give them more enlightenment, right? And also, if you need tax training, of course, you can always reach out to any executive, you can reach out to your consultant, right? Make sure that your clients, your employees rather, they are up to date on these tax changes, and then so that they can also develop and give you the best in terms of service offering as an employee to the company. So that will be all on the tax audit. Let me just quickly touch base on the current development. I'm just going to mention them a bit, not going too deep into it. So some of the current development in Nigerian taxation includes, of course, I just pick notable ones like the Finance Act 2019, which made changes to 27 about 7 tax laws. 2020, 2021, 2023 also made changes to like 10 tax laws, 10 acts, right? So we also have the Petroleum Industry Act 2021. We have the introduction of tax promax in July 2021. We have administration of e-tax, ETCC, and all those things like that. We also have the launch and suspension of the expatriate employment levy. Some of us have seen that it's still under suspension, but we don't know when it might come out. So I just have to put it here again. We have the withholding tax regulation that was released, of course, last month, but which became effective on 1st of July this month. So we also have the circular on voluntary contribution under the contribution pension scheme. That's this one by the Pension Commission team. We also have the tax treaty agreement with ECOWAS. Yeah, talks about withholding tax and some other tax treaty agreement. We also have oil and gas. This one is the executive order that was released by the president. Yeah, so we have the CBN guideline on national cybersecurity levy, right? And then we also have notable one which is trending at the moment, the Finance Amendment Bill of 2024, which is yet to be passed to law to finalize actually, but it has already passed the reading of the Senate. So, which talks about the imposition of 70% windfall tax on forex of, sorry, I'm going to put it completely, forex of financial institutions, especially those that make positive exchange gain, realized exchange gain. So yeah, those are some of the recent developments aside the topic we've covered. And thank you very much. It's nice sharing my experience and this talk with you all guys. Thank you very much.
Thank you. For that excellent presentation. I'm sure our audience in the course of your presentation, and I would appreciate if members appreciate him with various emojis as we have available to show appreciations that we have actually learned. We're now in the question and answer session mode. I've seen some questions in the chat room that I believe relates to this webinar, but if any of us is interested, okay, I've seen a couple of hands up. In order to manage our time, I would not, if you can take the first 5 people that raise up their hands to attend to their questions, I think that should serve us for the day. So from my own screen here, I've seen 3 hands. So I'll be going, in the order in which they appear here. Mr. Lukman Amuson, you can unmute yourself to ask your question. When asking question, kindly state your name, your membership number, and then the resource person that you want your questions, directed at. Mr. Amuson, let's hear you.
Okay, good afternoon all. My name is Amushon Lukman, membership number 026242 FCA. So I'm directing my question to the second speaker. I've forgotten his name. We talk
Mr.
about
Richard. It's Mr. Richard, sir. Go ahead.
Mr. Richard, we talk about the next review. So I have like 2 or 3 questions.
Let's try and summarize so that we can give others opportunity to
ask. They are just brief questions. Number 1 is based on it talks about additional audit and scrutiny. So I guess the question I want to ask is that, because what I know about all these FIRs is that after the debt review, we have the tax audit, then the tax investigation. So can we relate this additional audit and scrutiny to tax investigation? So that is number 1. Then number 2 is that based on the debt review that we are talking, we always have a problem with FIRs. You understand? Because companies are different. We have different companies. There are companies that have voluminous transactions. You understand? But this debt review of a thing, at the end of the day, after some filing the account online, they will now request for some documents. And in fact, most of the time, the documents are so voluminous that we cannot even make photocopies of it. So based on that, what can we do about that? Can someone just request for them to come and carry out the tax audit? Because the tax audit, they will come to the client's office, they will check all the transactions. But for debt review, it is going to be in their office. They will have to bring some transactions which are very voluminous. So based on that, what can we do about that? Thank you very much.
Thank you for your questions. I would like to take all the questions, so I would implore the resource persons to note the questions that have been addressed to them. So after taking all the 5, we can get their responses and then move on with the program. Thanks, Mr. Muson, for your question. Mr. Dauda Yakubu, you are next. Kindly unmute yourself and ask your question.
Good morning, sir. Good morning, everyone.
Good morning.
My question goes to Mr. Richard. Thank you for the wonderful presentation. Now, concerning the debt review, I heard that there was a FRS guideline published March, October last year, that the debt review should be limited to current year. But some FRS offices are still going out, serving letter for debt review cover like 3 years, and they are asking for some documents, such document, which is in contravention to FRS published guideline as last year. So I want Mr. Anissa to talk about that one. Second one, the issue of tax audits. I think that there was a guideline that said the tax audits should not cover more than 6 years. That 6 years, is it based on year of assessment or based on accounting year end? For instance, now we are in 2024 year of assessment now. Can FRS say they want to do tax audits from 2017 to 2023 accounts? So I just want him to clarify whether it is based on financial year end or year of assessment on that the time limit for tax audits. Thank you very much.
Okay, thank you, Mr. Yakubu, for your questions. Mr. Obasi Frederick, you can unmute yourself to ask your question. Mr. Obasi Frederick, kindly unmute yourself to answer your question. I can see you raised your hand. Okay, I guess Mr. Frederick is not available. Mr. Ezekiel Faniyi, kindly unmute yourself to ask your question. Okay, Mr. Obasi. Hold on, Mr. Faniyi. Hold on, Mr. Faniyi. Let's have Mr. Obasi ask his question. Go ahead,
Hello.
Mr. Obasi.
Yeah, my name is Obasi Frederick, membership number 007560. This particular question I want to ask a task question, but actually it was not talked about in this course. It's a question that has been lingering and has been affecting the operations of some of our clients. And I want to.
Who are you addressing your question to, sir?
To the tax, Mr. Richard.
Okay.
The tax man.
Go ahead.
Yes, there's this lingering issue of GIF mix in withholding tax issues. Over time, for the past 1 year, I guess, we have been having these GIF mix issues. I discussed with an FRS person some time ago, an FRS officer, and he was saying that the GIF mix has a problem with the tax promax. Now, some of these contractors that we have as clients, they do have jobs being done by them. Their withholding taxes does not reflect in the tax promax. And at the end of the day, they are asked to either pay extra money based on the fact that their company income tax is far away higher than what their company income tax. There is no withholding tax to clear their company income tax. I don't know how possible or how it can be dealt with. It's a very big problem and it's affecting everybody. So I want to get an idea from the Mr. Richard on that issue.
The question is not so clear. I'm so sorry, but I didn't get the question. I know you talk about give me sports. I'm not so clear about the question itself. So
what I'm saying is that, hello?
Go ahead.
What I'm saying is in simple terms that GIF mix, the withholding tax based on GIF mix platform does not reflect on the tax promax. How do we deal with that?
Okay, I get that. Thank you.
Okay. Thank you, Mr. Obasi. Mr. Faniyi, over to you now, sir.
Thank you, Mr. Moderator. My name is Mr. Ezekiel Faniyi, membership number 4231. I want to appreciate Mr. Richard for that beautiful presentation. My question are, one, when a tax audit is about to commence, or maybe you have already received a letter for debt review for a particular year, and in the process of replying the letter, the tax audit's letter was sent and was meant to be commenced. Do we need to still attend to this desk review? The second question is the treatment of bank duty assessments, that is the tax liability arising from a tax audit. When we are doing our tax computation, is it the total amount paid, that is the principal sum, as well as the penalty and interest, that we need to add back in our tax computation, or the penalty and interest alone? Those are my questions. Thank you.
Thank you, Mr. Fani, for the question. The last question we'll be taking is from Mr. Patrick Edenogba. Kindly unmute to ask your question.
Yeah, good morning, sir. My name is Patrick Edenogba, membership number 11175. My question is based on this self-charge VAT. Because in a VAT situation, we know we have ARPU VAT and IMPU VAT. You set the IMPU VAT against the ARPU to reduce the VAT payable. But in the case of self-charge VAT, how do you treat it? Do you treat it as an IMPU VAT that can be set against the ARPU VAT?
Okay, thank you. Let me quickly squeeze in Mr. Abubakar Mahmoud. That will be the last question we'll be taking voice. Kindly unmute and ask your question.
Mr. Abubakar, please ask internal control question, please.
Good morning, sir.
Mr. Abubakar Mahmoud, go ahead.
Good morning, sir. My name is Abubakar Mahmoud, membership number 042605. My question is in regards to an internal auditor. A situation where, for example, in the public sector, where a voucher is being raised by the account department and all necessary checking has been taken care of, and an auditor will flag the voucher and we insist that as his query must be answered before payment. My question here is, does the internal auditor have power to prevent payment, or is he just to put up his opinion or his query on the payment voucher? Thank you, sir.
Okay, thank you, Mr. Mahmoud. Thank God I squeezed you in, because I was wondering if all questions are tax related. So, Mr. Bamgboye, you heard the last speaker, and there was another question in the chat room for you. Let me quickly read that so that when you are responding, you can do justice to both of them. My question on internal control, sir, is there any standard procedure in carrying out internal audit exercise in respect of the nature of clients' business activities? That's from Mr. Sunday Ojedokun. So, Mr. Bamgboye, can you attend to the two internal control questions, while Mr. Richard will attend to the other 5 tax-related questions after you? Over to you, Mr. Bamgboye.
Okay, thank you very much. For the government starter, I think we should, as internal audit professionals, or as professionals generally, I think we should know where to draw the line and where not to overstep our boundaries. So it's I think what that auditor did, it's out of place. Your job is just to advise the management. Your position is that of an advisory position. So you don't have to you don't have the authorization to give approval. So I think that's I would like to stop there because of time. Please, what's the second question?
So the second question is there any standard procedure in carrying out internal audit exercise in respect of the nature of the client's business?
Yes, the standard, yes, there are internal audit standards as issued by the Internal Audit Association. They are in fact, let me explain. It's the procedure for conducting internal and external audits are quite similar, with little differences. So they are with little differences. With little difference. So you can always get them. You can always get the standards online, but you need to tailor it to the organization you are auditing. You need to tailor it specifically to the organization you are auditing. So I think that is that.
Okay.
So you can yeah.
Thanks for your responses. I hope our participants have gotten clarification regarding their questions. Over to you, Mr. Richard Okunola, to the questions on the tax-related presentation.
All right, thank you very much. To everybody that has questions, I was afraid that when everybody was asking tax questions before, that nobody was going to ask internal questions. So yeah, I'm going to answer the question in the order of which they were asked. So the first person asked two questions, and the first one says that, can tax audit and desk review be related to tax investigation? Because of the way the nature of the work is, I can really say that it's actually tax investigation. So the answer is no. So there is a clear difference between a tax audit and tax investigation. So even though they take the same format, the reason for a tax investigation is usually due to whether a whistleblowing or a perceived default or an intentional or willful negligence on the part of the taxpayer to file his tax returns, or a report has gotten to the FIRS that shows that this person is into fraudulent act, right? So that is what causes a tax investigation. Then the investigation has no limits. They can go as far as 10, 20 years, or to the existence of the company. The date was started operation. They can go as far back as that. Whether you now have document or not is what I cannot answer for, but the investigation can go as far as that. But for tax audit, of course, just like me answering the last person's question, one of the last person's question about the statute of limitation, I guess that was what the person is trying to say. So there's something that we call statute of limitation, which limits the year that a tax audit can be conducted up to. So the tax law provides that a tax audit can be conducted for a period not exceeding 6 years. 6 years. So that 6 years now, it varies depending on your own interpretation. So the 6 years can be 6 years from the end of the accounting year you are currently, which is, of course, if you are 2023, you count it backward, 2023, 2022, 2021, 2020, 2019, 18, yeah, maybe 18 now in this case. So you count it backwards and then determine that 6 years. However, if the 6 years can also be looking like a 7 years, where the accounting year end is in between. Let's say you're having a March, September, June accounting year end. So it's possible. So the other way to also look at it in calculating that 6 years is look at it from the year end in which your taxes is due. So those 6 years backward, that's what you calculate. I think I answered those two questions together. So let me move to the second question. Second question is on voluminous document request from desk for desk review. So there is, except the nature of your business, if there is possibility that where the documentation is not properly done, then it may look like it's too much. What I would normally advise is that FIRS, except a case of investigation, there is a slim chance of requesting for all transaction lists in terms of document support all transactions. So I will encourage you to have a good relationship with your FIRS tax officer. And some people just fight with everybody, fight with the FIRS officer. I'm not saying you're fighting with them, but I'm just giving you a strategy. Have a good relationship with them so that you can tell them that, oh, I have 200 sales this month. Please, can you pick the top 10 or top 5 or top 20? And I'm going to provide you with all the invoices instead of me having to pull all list of transaction I did in this month. So that way, you're strategically managing time, and then you're achieving the same result. If 10 of your invoices can give you 90% of the total sales you made in a month, why are you bothering to get 100 invoices that we are trying to get the remaining? So that's like a strategy I can say you should adopt. So now, second question, or let me say the second person's question, says that clarification on tax audit and desk review overlap. So sometimes last year, the FIRS released a document. I'm trying to get the name of that document, but then I'm sure some of us are familiar with that circular, which talks about clarification on tax audit, tax review, and then compliance, tax compliance, like all this monitoring exercise. So which one supersedes which? So based on that circular, and of course, which we've known previous to now, but the circular just provided a clarification. Based on that circular, it says that where a company receives a desk review letter, the moment you receive a tax audit letter that covers the same period, automatically that desk review is suspended. The tax audit oversees the desk review. Similarly, where a tax audit is currently ongoing and the company receives a tax investigation letter, irrespective of the work that has been done on the tax audit so far, the tax investigation letter supersedes the tax audit. So that is simply the process. So I hope that person gets the question clearly and the answer to that question. So number 3, which is, okay, the person also, I think I've addressed the statute of limitations, so that one is fine. The person also asked question on withholding tax on GIFMIX not showing on Tax Pro Max. Yeah. So I think in 2021, 2022, the FIRS made a call that people that have withholding tax credits that they've not utilized, they should come forward for what they call the reconciliation meeting on withholding tax, so that they can now upload those withholding tax that have been reconciled on Tax Pro Max. For many companies that go for that exercise, that went for that exercise, I am aware that FIRS has uploaded many of them, maybe not all, or let me be careful of saying many, but for at least for those that I've seen that went for that reconciliation, FIRS has uploaded those things on Tax Pro Max. So what happened is that, and that's one of the problems we have with the continuity of government, where somebody comes and say, oh, I need to do a better system. Not exactly like improving the existing system, but I want to do something completely new. So that is one of the challenges that we might have. So the problem is not because the GIFMIX is not integrated with Tax Pro Max. The problem is because you need to go to the FIRS with your credit notes details, and then go and do a reconciliation meeting with them to help you upload those credits on that GIFMIX portal to the Tax Pro Max portal. Any transaction you do from July 2021 till date, I'm not expecting that those transactions will reflect on GIFMIX. They should reflect on Tax Pro Max. So I want to believe that this is a backlog of previous year's transactions. So you might just want to, approach the FIRS and look for how they can help you to migrate those information. Yeah, so that one answers the question. And also just a kind of advice to other people that might be listening. So I would encourage you as much as possible, your details on Tax Pro Max, especially for your withholding tax credit, try to be pulling them on a monthly basis and be saving it, right? I'm not hoping that the Tax Pro Max portal will develop any fault, but of course we know how that government changes and policies changes. So it's better to have your information in-house, be saving it, be keeping a record of it, than something happens that everybody loses information to it. Yeah, so question 4, which is the last one. It says that how do we approach a situation where desk review and tax audit is received simultaneously? So let's assume that you got a letter, you're still responding to it, you're already providing document, and tax audit comes in. Of course, like I mentioned, if it is for the same period, the tax audit automatically supersedes it. You just have to attach the tax audit letter, write a letter to the desk review team. They are working from the same office. Then submit it that, see, there's a tax audit letter that supersedes this one. So as a result, we are moving to this. And you tell the two teams to also coordinate with each other and talk to each other so that they don't come and be disturbing you for the same exercise. However, if it's for different periods, let's say the desk review is for your tax computation that you submitted in 2023, and then the tax audit is for 2019 to 2020 account. They are two different exercises. They don't affect each other at all. So let's take note of that. And finally, the person also asked question on back duty assessment. Are we to compute penalty on interest alone or liability penalty and interest? So depending on the level of liability. So ideally, in my own opinion, right, the back duty assessment, the portion of liability that was established, right, there should be a way that the tax authority can know that this is as a result of our own add back. Let me give you an instance. A company has said our expenses is 200 million. All the expenses are, they pass the rent test that is under the section 24 of CETA now. Everything is fine. Now, FRS now come and say, okay, there's a particular item on your expense that does not pass the rent test, so we are going to add it back. Now, at that point, when they are subjecting it to penalty and interest, the problem should not be about penalty and interest. It should just be about paying the additional difference because it was not initially your fault. However, because it's also difficult to determine or separate between what's it called now? To separate between whether it's a willful default or a negligence or a discretionary issues. So then they subject everything to penalty and interest. So it's quite disheartening this way the stuff is, but of course, I think sometimes when you can negotiate properly with the FRS, they might be able to reason along with you because it's not your fault that it wasn't audited on time, and it's not your fault that that item is allowable, but maybe at that time you didn't know that it's not supposed to be allowed. So let's I think that answers all the questions so far. Yeah, I think that's all. I don't think there's any question for me in the chat box.
None at all, at least at this moment. Thanks, Mr. Okunola, for that extensive response to the questions, and I'm sure our panel, participants, appreciated that as well. For any of us that have other questions, our time is fast spent. Our plan was to close at 12, but because we, delayed commencement, that's why we're able to more or less extend for some minutes, and then took on more questions because I know, people have questions relating to their personal experience are attended to. For those of us that are requesting for the slides and the presentations as well as recording, be rest assured that this will be shared to all registered and paid participants at the end of the courses. And if any of us have any other question, we can, route that question through the technical secretary who will help collate, reach out to the resource persons who will provide responses, and then that will be communicated back to all participants as well. It's from. Be rest assured as well that all registered and paid participants will be credited with their 5 credit hours, which is what the organizers have secured for this webinar. Moving on to our next item now, we'll now be inviting
On a lighter note, sir, what about we, the facilitator?
The facilitators who will be getting, from what I understand, that's one of the benefits of providing your resource and expertise to the benefits of our participants. So it's for everybody that is on this call. We'll now call on the district vice chairman to give vote of thanks to the resource persons as well as the participants as we gradually come to an end with to this webinar. Over to you, Alhaji Adeniyi Asansa.
Good afternoon, all. We want to especially appreciate the 2 facilitators today. The first on audit and the second on tax, for taking us through important aspect of our profession. No doubt many of us have learned from the wealth of experience of the facilitators. And my prayer and hope is that the things we'll be able to acquire today, we'll be able to put them to use in our respective place of work. on behalf of the ICAN Amuwo and DC Society, we want to especially thank you for the time you spent and for your patience in ensuring that we're able to grasp from your knowledge. I also want to appreciate the participants for taking their time, spending their money to attend this facilitation. I'm hopeful that in future, they will also want to take advantage of this opportunity to enrich their knowledge. Thank you, thank you, thank you.
Thank you, our Vice Chairman, Alhaji Adetayo Hassan, for that vote of thanks.
Yeah.
The credit hours is not for Amuwo district members only, it is for all paid and registered participants. So if you have paid and you have registered for this program, as well as the resource persons, you will be credited with your credit hours. And if within the week you don't get that, just reach out to the contact numbers you have in the flyers, and they will be able to issue. We now call on the district technical Balogun Isiaka to give us announcement relating to future webinars you should be looking out to from the district. Over to you, Alhaji Isiaka. Oh, sorry, you are muted. Let me kindly unmute yourself. We can't hear you.
Okay, good afternoon, sir. Ma. For all the participants, we thank you for participating in our this month webinar. By God's grace, in every fourth month, the fourth Saturday of every month, we organize this such webinar, and we promise you, you see us on our various means of communication. You shall see us. We inform you for subsequent webinar, which the last Saturday of every month, we come up with a new and seasonal lectures. Yes, and then our monthly meeting hold every second Saturday at Lagos State University of Science and Technology, Solo. So we encourage new members to join us as well. And likewise, our meetings and our webinars will be coming up. We thank you all for joining us. And we promise you, as you enjoy the today webinar, subsequently, we come up with other resource persons that we have. So we appreciate you once again. And if you have joined us, if you have paid, we rest assured we are going to send you the slides. And as we have promised you that there is going to be an hitch-free webinar, you can all see throughout, no problem. Respond to you, all your needs. While the program is going on, we're still responding to you. I thank all my team, my chairman, my district chairman, and all technical committee. I appreciate you all for supporting us for this month webinar. I thank our resource person and my moderator and everybody, all the school. Thank you for joining us, and thank you all the participants. We should expect this such webinar next month by God's grace. Thank you all. I appreciate you all. Thank you. Bye.
Thank you, our district technical secretary, for that announcement. So this now brings us to the end of today's webinar. Like we assured you, all registered and paid participants will get the slides, will get the recording, they will get the accreditors. And if any of you have other questions, reach out to the contacts you have on the flyers, as well as all the correspondence that have been sent to you, and you'll be duly assented to. We will now close with the closing prayer. followed by ICAN anthem, and then the national anthem. So as we started, we are still going to close with our the second stanza of the old national anthem, and let's recite together. O God of creation, direct our noble course, guide our leaders right, help our youth the truth to know, in love and honesty to grow, and living just and true, gravity loved heights attain, to build a nation where peace and justice shall reign. Thank you and amen. So ICAN anthem now. National anthem now. Thank you all. That will be all from us. Over to you, Chairman.
Thank you so much, everyone. Thank you, Mr. Moderator, Mr. Michael Alatish FCA. I'm really, really grateful for you granting us your time and your skills. You've always been a very wonderful partner with us in ICAN Amuwo and District Society. To the technical committee, I'm sincerely grateful for this. to the entire executive committee and the entire membership of ICAN Amuwo and District Society, we say a big thank you to everyone and to all our participants. Thank you for sowing your resources into this. There's nothing more beautiful than personal development, and you've been able to key into this. And just like my technical secretary rightly said, this and more will be coming your way every month. So stay tuned to this channel. We promise to always make you proud. All ICAN Amuwo, Vanguard of Integrity. Have a lovely weekend. Bye for now.
My chair.
Of integrity.
Thank you, everybody. Thank you for being there for me. Thank you, everybody. Thank you. I appreciate you. I will not let you down. Thank you.